All right, how's it going, friends and family? My name is Amos, and before my daughter was born about 2 weeks ago, I uploaded a video onto this channel talking about how Amazon was undervalued and Amazon was cheap. And it's not just because I'm trying to pump my own stock, but when you compare Amazon against the Mag 7, like Meta, Google, Tesla, Nvidia, I kept saying that Amazon right now is really cheap and it's a good deal. And I still think that Amazon right now is a pretty good deal, especially considering their future. Go and watch the original deep dive video that I made about Amazon if you want to know why I still think they're the most undervalued in comparison to the Mag 7. Yes, friends and family, I know that Meta dropped off a cliff after their most recent earnings because of their CapEx spending going up through the roof. And even though Facebook went on a sell-off, I still think Amazon is more undervalued than them. And me just saying that sentence, that Amazon is undervalued, I know some of you are probably thinking I sit down to urinate because I'm an idiot. But guess what, my big pepperoni nippled friend? Amazon just posted their earnings. I'm filming this right after they posted their earnings. They're up by, 13% in the after hours. And I thought it would be the most perfect time for me to revisit my thoughts on Amazon and to do an analysis on them once again. So in this video, we're going to be covering the recent developments that are surrounding the company, their earnings. We're going to go over how it went. We're also going to be calculating a new price forecast for Amazon, and we're going to be adjusting where they belong in the compounder chart. Okay, I know some of you guys like that segment. And then towards the end of the video, I'll be revealing my position in Amazon and go over my game plan. Like, am I going to sell out? Am I going to jump ship? If that sounds good with you, pull up your pants and let's get into it. All right, so how exactly did their earnings go? And by the way, the earnings is a financial snapshot and progress of how a publicly traded company did for the past 90 days. So in the past 3 months, how did Amazon perform? Well, I am pretty excited to say that they blew past the top and bottom line expectations. Revenue was up 13% year over year, and the bottom line per share is up 36% year over year. And the guidance going forward for the next 3 months, this holiday season, in the e-commerce industry, it's commonly referred to as peak season. So November 1st all the way to like the first or second week of January, that's when they're shipping out around the clock nonstop. So if you work in the outbound department of a fulfillment center, you already know that you're going to be super busy, but you should be getting overtime pay once you get past the 40 hours a week. For the fourth quarter, they're anticipating revenue growth of at least 10 to 13%. So they're thinking they're going to do it again. And right now I'm on a website, stockanalysis.com. I have a referral link down below in the video description. If you sign up using my code, you get a discount on top of whatever promo they have going on. If I jump on over to the metrics tab and I break it down on a quarterly basis, just check this out, okay? AWS, which is like their internet server, cloud, and AI endeavors, well, that business segment, as you can see, grew by 20% year over year. And once again, it surpassed the forecast. They were not expecting it to be that juicy because leading up to this quarter, like in the second quarter, AWS only grew by 17%. And prior to that, it was 16.8%. So they were expecting something very similar, like a 15%, 16% growth year over year. Friends and family, Amazon, they figure out a way to do it again. And what makes this even more exciting is that it's the fastest growth that they have seen in AWS since 2022. They basically said, even though they're spending billions of dollars on CapEx to expand their infrastructure to build out more data centers, the customer demand is relentless. Now just think about that for a second. They can make more money from AWS, but their bandwidth has been stretched to its limits. That's why they're building more data centers in order to support AWS's growth. So when you think about CapEx as something negative, I already know you know nothing about business. Sometimes you need to spend money right now, plant the seeds so that 5 to 10 years from now, you can make so much more money. The revenue can be amplified. If you don't build the infrastructure to support your growth, then in the supply chain world, you're basically bottlenecking yourself. So when I see Meta spending billions of dollars on CapEx in order to support their infrastructure, I'm like, that's a good thing. And there's people out here that are selling out of it because you're stupid, you're short-sighted. So when I see AWS spending this much money, can't you tell that my nipples are getting perky right now? I'm so stoked. Same reason with Google. Like 6 to 9 months ago, people were scolding Google for spending so much money on CapEx. Now look at Google. They're almost $300 a share. CapEx, if done right, is good for a business. It's healthy for a business. You got to spend money in order to make money. But if we take a look at some of the other business segments, advertising. Yes, friends and family. Have you ever tried to buy like a headlamp on Amazon? You're going to get like 3, 6, or even 9 posts that come up on the top because they're sponsored, because they're paying Amazon to be advertised front and center. I don't think you understand, friends and family. Not only are they making money from the transactions of items being sold on their platform, but they're also making people pay to have their items advertised. Dude, that's just wild to me. Advertising's revenue went up by 23.5% year over year. Guys, if we're truly in a recession, if we're truly in an economic downturn, why the heck are more merchants and vendors and suppliers and e-commerce sellers spending more and more dollars to advertise? You advertise when the times are good in order to sell more stuff. When we're in a recession, the first department they start cutting back on is marketing, is advertising. Actually, they cut back on the recruiters first, and then the marketing department starts getting laid off. But the advertising revenue is up by 23.5%. Leading up to it, in the prior quarters, we're talking about 17%, 17%, 18%. So what I see is that I don't think we're in a dire situation as people keep saying we are in. I think for the most part, the median 50% of the population, it's business as usual. We're doing okay. And the ones at the top, obviously they're thriving. And then the ones at the bottom, of course, times are hard. But for the most part, by gauging Amazon's numbers, because when you think about it, I would argue 1 out of 3 people do their shopping primarily with Amazon. If we were truly struggling, I feel like one of the first things we're going to cut back and pull back spending on is random crap that we buy on Amazon. But you tell me, why is the online store's growth 9.7%, just shy of being 10%? Tell me that right now. If we are truly struggling as a society and as a population, we would stop buying random ass gadgets and items and things that you shove up your butthole that's like $21.99, but you need to get that free shipping, so you add more to your cart. $35 is the magic number. Dude, I think we are doing okay. I think the numbers suggest that we are. I could be wrong, but using Amazon and Walmart as a gauge of how we are doing as an economy, I think we're okay, at least here in the US. Now, obviously, if you're watching this video from like France or Hong Kong or like Singapore, I don't know about your economy. But here in the US, it looks like things are business as usual. And it gets even better because when we think about Amazon Prime memberships, they just settled and got in trouble, right? They paid out like $1 billion or so to the people that they screwed over with canceling the Prime subscription like a year or 2 ago. But Amazon Prime subscriptions, that growth, it grew by 11.5%. The domination of Amazon, they don't know how to stop. They only know how to go full throttle. And what's really funny is that Amazon also owns Whole Foods, which is like the organic, bougie grocery chain. Like, you don't go there to buy your groceries unless you make like a 6-figure median income as a household. Even them, they're growing 6.6% year over year. So I'm pretty excited about Amazon. However, it is worth mentioning that when we think about their earnings, it wasn't all rainbows and sunshine, and it's not a complete, beautiful Bob Ross painting, because I think leading up to the earnings, there was a whistleblower or a leak that Amazon was going to have a round of layoffs. And yes, it has been confirmed. Amazon's going to be letting go of thousands of corporate employees with an average compensation package of like $160,000, $180,000 when you take into consideration the RSUs, the sign-on bonus and everything. So that's a lot of money associated with those employees that are being let go. And they were hired during the pandemic, which is when the whole AI movement just went into full throttle, and everybody across the board, they were over hiring. And now they're reversing course and they're letting them go. And I think, between you and me, I think that's kind of unfortunate, considering that Amazon right now, as you can tell by their numbers, they're making record levels amount of revenue and profits. So to be fired while your company is thriving and flourishing, yeah, that's not good, right? And Andy Jassy, the CEO, he said that there's too many managers and way too much red tape for Amazon to cultivate their culture of day one. Like whenever you go into work on a project or a team meeting, they want you to work as if it's your first day there, to ask questions, to probe, to think outside of the box, to be excited, to be nervous. But he's saying there's just way too much fat around the middle manager category, and so they're trimming it. And Andy Jassy said that trimming the workforce is going to be a strategic call to make decision-making in their operations more nimble, to make it more lean, to act and behave like a startup. Dude, Amazon, you're not a startup. You're in a financial position to be able to afford a dividend. Just stop pretending like you're a startup. But anyways, whether you agree with Andy Jassy or not, I guess we will see if this is going to help the company in the long run. I also think that they're laying off employees because AI is replacing their jobs. So whatever it is that they were doing, if they were just copy and pasting numbers all day, 50, 60 hours a week, well, now AI is going to do that for them. That's what I think is happening behind the scenes as well. Like, obviously, I think they did want to get rid of the bottom, 2 to 3% of the performers. I think it's called RIF in the corporate world. But all that to say, if Amazon continues to grow their revenue 10 to 13% quarter after quarter, and then by reducing the SG&A, dude, that's going to dramatically increase and pump their net income. Let me jump on over to the income statement to show you what I'm talking about, right? So in the past 12 months, they generated $691 billion. But the cost to do business, right? The cost of that revenue is $345 billion. So what's left over, your gross profit is $345 billion, right? And then the next biggest line item expense for a company is the SG&A. That's basically the compensation, the salary, how much you're paying the fulfillment center workers, but also those middle managers that they just cut. So this number right here, the SG&A, is about to get reduced by a lot. While this number right here, the top line, the revenue is growing bigger. So can you see how the net income is going to increase? Because the SG&A takes away from the bottom line. It eats into your profits because you have to compensate more workers that are on the payroll. So I see what Andy Jassy sees, but what I'm trying to say is I still think that's pretty dirty. Now, obviously, because he's the leader of one of the biggest companies in the world, he can't say stuff like that, right? Like, we're getting rid of our bottom performers and AI's replacing them, because that will create so much fear and uncertainty in the streets. Like, oh my gosh, there's more people getting fired and there's going to be panic everywhere, especially in Amazon's buildings itself, right? In Arlington and in Seattle. So instead, I think he's just saying, oh, we're cutting these employees to make the operations move faster, quicker, and be more agile. But I also think it's because of AI. Now, obviously, that's me speculating. So even though it's a very unfortunate situation and an event of people being fired, Amazon's profit margins will improve. So I think he's doing this strategically. But personally, I'm going to say this. This might be an unpopular opinion, but I think the optics of the layoff timing is so freaking poor, in my opinion. They're doing it right before Christmas. To be fired and to be searching and to be interviewing for a new job during the holiday season, you don't think that's going to leave a bad taste in the mouths of all the former employees? Dude, they're probably going to boycott Amazon till the day they die. That's like, what, 14,000 employees? And you might be like, oh, that's chump change. But the way that you treat your workers when the times are good and when the times are bad, believe it or not, people will remember. And most people, they do hold grudges. So even though Wall Street might be celebrating and high-fiving one another because Amazon's profit margins are about to improve because so many people are getting fired, on a human-to-human level, I'm pissed. I told you that Amazon is a really rough place to work for, a toxic work culture, and to see them doing stuff like that in the holiday season, it just rubs my butt the wrong way. Okay, I'm not happy, but it looks like Wall Street's pretty happy. They're up 13% after hours, right? They're going from $222 a share to $252. Now, with all that said, now let's jump on over to my new price forecast for their stock price. Like, what's the inherent worth of Amazon, the company? Now, when you take a look at 2025, we have about 2.5 months to go until their fiscal year is over, which includes peak season, which is when they're going to make the most sales especially through the e-commerce arm of the business. The forecast is $6.85. But friends and family, as of right now, at the time of making this video, their earnings per share for the trailing 12 months is around $7. So I think this number is too bearish. So I'm projecting that Amazon's going to hit $7.08 of bottom line per share, of net income per share, of earnings per share for the 12 months in 2025. And if they continue to trade at a PE ratio of a 35, then I think that Amazon's going to finish out the year at $247 a share. Right now, they're $225. After market hours, they're $250. So they're finally trading for the valuation they should be, which is $250 a share. However, for whatever reason, if the narrative changes and everyone becomes bullish on Amazon once again, their historical PE ratio for the past 10 years, we're talking about a 94.9. Now, if in fact Amazon trades for a very pretty premium once again, and they hit a 95 PE ratio, then they could hit $671 a share. But do I see that happening? Dude, I'm going to be honest with you, even though I'm a shareholder of Amazon, I do not see that happening. Statistically, it just can't. Because if NVIDIA, who's the tip of the spear of the AI movement, if their PE is like a 34, 35, 36, depending on the day that you look it up, I don't think Amazon can reach 94. If NVIDIA is a 35, then I think Amazon's also going to be around that ballpark number, 35, 36. I think because of this really good earnings report, I think their PE might jump up to like a 40, which means their stock price might hit like 260 in the next like 2 weeks. But I do think they're going to trade flat and then come back down to earth and finish out 2025 at like 250 a share. Now, I'm not trying to say that I know what's going to happen, but based on the numbers and data that we're working with, that's what I'm predicting, right? I could be wrong. I'm also an idiot. I sit down to pee. I don't wipe enough. I walk around with like a crusty butthole. So what do I know? Okay? But if we fast forward with this thought experiment, and Amazon continues to improve their bottom line, they continue to crush and generate more cash, and AWS just goes through the roof, then let's go ahead and assume that in 2028, their earnings per share is $11.25. That's predicated upon the fact that Amazon is not going to do a stock split. They're not going to pay a dividend. They're going to stand firm by saying, oh, we're reinvesting all of our excess cash back into the business. Okay, $11.25, and they trade for a PE of a 36. Then Amazon could eventually be $405 in about 3 years from now. So going from $222 to $405 sounds pretty good to me. But for whatever reason, if 3 years from now we have a transition of the presidential administration and more people become bullish towards Amazon and all of the antitrust, monopolistic, regulatory probing goes away and their PE hits a 95, then Amazon could hit $1,000 a share. But do I see that happening? Like a fat chance, maybe like 1%. I'll be honest, I don't see that happening. But a number in between 400 to 1,000, maybe 500, maybe 550 seems more likely in a statistical probability. But $400 a share, I think, is on the low end of what they could hit as a share price in 2028. Once again, I'm not saying that I know what's going to happen. I'm not a genie in a bottle that you piss in, that your cat drops her fecal matters into. I'm just a guy proposing what I think for fun and entertainment purposes, right? But 247, Amazon 250 right now, I think they're fairly valued. Now, with that said, let's transition to the next segment of the video. I'm going to adjust and modify where Amazon belongs on the compounder chart. Now, leading up to making this video and their most recent earnings, what I saw on paper, Amazon's numbers, they were slowing down. Their growth story, the gas was letting off the pedal, right? So consequently, I had placed Amazon into the A tier bucket. Still, they're head above shoulders better than, Clorox, General Mills, MP Materials, but they were below Google. Google for me, dude, I get so freaking excited when I think about the prospects of their business in the future. 10, 20, 30, 40 years from now, Google has their hands in so many different lines of business. I'm so bullish about Google. So I think they're S tier. However, I think we're going to have to adjust where Amazon belongs. And I think you know where this is going to go. But I now have Amazon right next to Google. They're both in the S tier, certified compounder. My money invested into Amazon today will turn 3, 4, 5x in an XYZ amount of years. And I feel pretty confident about that. The reason why I feel so absolutely bullish about Amazon is because just like Google, Amazon is doing so much. They're so flush in cash that they can take risks and allow different projects to fail, and it wouldn't even hurt their bottom line. I mean, it might make a dent, like maybe 1% from the net income, but for the most part, Amazon makes so much cash, they're able to take calculated risks to expand and grow and do moonshot projects, right? I think something that really excites me about Amazon is, prior to becoming a full-time YouTuber, I used to work in the pharmacy space as a strategy leader. So I do have line of sight and I have an understanding of that landscape. So I would say I'm most excited, sorry, my dogs are barking a lot, but I'm most excited about the healthcare endeavors with Amazon launching their own insurance, their prescription delivery model, and even offering virtual doctor services. They're taking that playbook exactly from CVS, exactly from United Health Group. I don't think you guys understand. Healthcare, I'm really bullish about. Now, I obviously don't like the pharmacy companies or pharmacy stocks. I love their mission. I love what they do, but investing into them, not a big fan of. I do think working for a pharmacy company is so good. Like if you want a chill 40 hours a week type of job where you're never going to feel stressed except for maybe when the patent deadlines are around the corner, look into joining a pharmacy company. But anyways, I also feel really excited about their advertising growth. But most importantly, I feel like the markets are not properly pricing their Project Kuiper. It's the high-speed internet from their space satellites. They're launching satellites like almost every single week. And friends and family, nobody ever talks about Amazon's space endeavors, right? And I get it. I think Elon Musk's Starlink has all the buzz, has everybody like praising them, but Amazon is catching up. And the thing is, once a customer buys Kuiper instead of Starlink, that customer is going to be in Amazon's ecosystem for everything. Talking about AWS, for Amazon Prime, for streaming, for gaming, for audiobooks, for buying things online, and everything in between. Now, why? Why do I see that happening? Because how I see it right now, it's becoming scary. I really do think it's becoming scary how strong of a business enterprise and how big of a conglomerate that Amazon is becoming. They are going to become a one-stop shop for every single one of a consumer's needs, including their healthcare. Think about it like that. Dude, that's crazy. Now, obviously, if we look to the past, when a company did the exact same thing that Amazon was doing, like GE, eventually they dissolved because they just became too big for their own good. And if we look at history, the Roman Empire, well, they also shattered and crumbled because their decentralized command and leadership model, it was just way too big for them to control properly, right? Same thing with the Mongols. So that is something to be mindful of. I do think Amazon, they're slowly getting way too big for their own good. But for the time being, I think it's pretty darn exciting. Now, not as an investor, I am kind of scared. I'm like, hold on, guys. I think we got to pump the brakes. They're doing advertising, they're doing prescriptions, they're doing e-commerce, they're doing AW, they're doing way too much, and they even have an autonomous AI-driven robotaxi known as ZooX that's live right now in Las Vegas. They're practically doing everything. It's kind of scary. I almost don't like it, but as an investor on this side of the spectrum, I'm like, dude, sign me up. I still think they're way too cheap for all of their endeavors. And I still think that Wall Street is not pricing properly their Project Kuiper. That alone should be like a $50 to like $100 billion market cap just from their space satellites. And that's because Starlink's business, depending on where you look, it's valued at like $50 to like $85 billion. So I think Kuiper should be right up there with Starlink. And before I sign out of here, I want to reveal my position and talk about my game plan going forward. So if I scroll on down, let me show you what we're working with. Obviously, I'm not loaded. I'm not rich, okay? So don't laugh. I have 5 shares of Amazon. My cost basis per share is $216 a piece. So the cost basis is $1,000. And prior to them releasing their most recent earnings, I was in the green 2.9%. Nothing to write home about, but I was in the green. When I wake up tomorrow, I should be in the green by a lot more with Amazon, right? Like 10%, 15, maybe even 20% in the green. And I bought into Amazon very recently, right before my daughter was born, October the 10th. And I bought 5 shares. My only regret right now, I'm gonna be honest with you, I wish I could have bought more, okay? I wanted to if Amazon reached $215, $214 a share, but it just didn't drop that far. But I'm still happy that I did get them at my initial dollar cost average price of $216.50. Now, I do want to call this out. I want to say that I'm not a magician and I'm not perfect. Yes, I got it right with Amazon. Yes, I got it right with Google, AMD, Nvidia, United Health, and the list goes on. But just this past week, I actually lost money by selling Booz Allen Hamilton, and I lost about 9% of my capital. So I don't want you to ever think that I'm perfect. I'm not. I also lose money. But fortunately for me, Booz Allen, I only had a little bit into it, just fun money. With Amazon, United Health, and some of these other companies that I got it right with, like Huntington Ingalls, Lockheed Martin, that's where I deployed a lot of capital. When my conviction is high, that's when I usually go all in. So, my game plan with Amazon, if you can't already tell, I'm an Amazon bull. Now, I don't like how their company is so big, it's scary, especially for the competition. However, I feel pretty stoked about Amazon and its future. So tell me, why would I ever want to sell them right now? Just because of that short little pop and rally. I truly think in 3 years, Amazon is $400 a share. I could be wrong. I am not trying to say that that is going to be a fundamental truth. They could drop down to $100 a share. But I personally think that Amazon could hit $400. So for the time being, I'm a happy camper with what I have. I do not plan on selling anytime soon. And I also don't plan on buying any more shares as of right now, because at $250, I feel like they're fairly valued for 2025, right? Obviously with the scope of being a long-term investor, but Amos, if they're eventually gonna be $400, it doesn't matter if you buy them at $250. Yes, I get that, but I only like to pull the trigger and buy stocks when they're way below their intrinsic valuation and inherent worth. For me, Amazon, I need them to be around that $215, $214 range, and then I'll dollar cost average. But yeah, I'm pretty happy. I'm pretty happy if you can't tell. So let me know. How do you feel about Amazon? Are you bullish? Are you bearish? Are you a share owner of Amazon? What am I missing? What am I missing? What makes them trash? What makes them even better? Let me know. Please have a dialogue with me, because right now, I think I'm trying to think about it objectively with the numbers and data, but I'm also a human. I also feel like there's an element of emotions making me feel excited about the company. So by talking with you and the YouTube community, I want you guys to put me on. Am I justified in being excited about their future, or am I missing something? Now, with that said, I love you guys. Stay safe. Good luck in the stock market, and I will talk to you really soon. Peace.